Hey there, Rob.
Hey Colby, how you doing?
I am doing well. How are you?
I'm good. I'm good. This is back to back today, but this is actually my last of the day, I think. Knock on wood. So I try to carve out when I can mornings and then, we'll book time in the afternoon because I kind of, I'm freshest in the morning and have time to think. So I've learned over time, like try to protect that time. But this morning my daughter had a dentist appointment. So kind of threw everything out of whack on my normal schedule. And I'm not always able to get that, particularly if there's folks from like Europe or whatever, right? But I try to. So I've kind of got a lopsided day where it's busy early on, and then the end of the day, ironically, is a little more open. So
Yeah, the good protected focus time, right?
I've just learned over time, and the nice thing about being self-employed now after years in corporate America is I'm able to manage my calendar a whole lot more than you could try to do that when you work in a large corporation, but someone three levels above you says that's the time I have to meet, then you're going to have to meet at that time. Doesn't matter if you have your think time scheduled or whatever else you've got.
Always seems to be 5:30 on a Friday for some reason is when they're
always,
available.
always. Well, and if you carve out, say you carve out 3 hours, whether it's you alone or you and a team of folks, you really, of course, the middle hour is the one that's going to get stolen, right? It's not like, well, if we have three and we only get two, like we'll still be getting. No. It's like, no, I need to chop that right in the middle.
Exactly. Well, I certainly appreciate you taking the time to join us today. This is uh, our most well-registered webinar. We had
Oh,
a couple
fantastic.
hundred people actually sign up for it. So uh, I'm excited. Sounds like you're excited. I mean, you're
I
also just
am.
probably one of the most iconic voices in the insurance world.
Thank
So
you.
I don't think it'd be complete if we didn't have you, Rob.
I'm well, I have to admit I have so I've known Carrie Ann for quite some time, but I think for this particular topic I have an inferiority complex to her of, hey, I'm theorizing about it and speculating, and she's actually doing so.
Well, now imagine how I feel.
I know, yeah.
I'm like the
But
third stooge.
it's a fascinating topic, and I yeah, I'm sure we'll have no trouble covering a lot of territory with it. So I'm looking forward to questions too from the audience and see what comes in.
Yeah. So the really interesting thing is when I was just, perusing the registration list, there's a couple of companies on here that actually develop software for telematics to sell to insurers. And there's a couple that focus primarily in Latin America and Europe. And so it's
Oh,
really
okay.
interesting that it's we're not just
I
talking,
love that.
North America, right?
I love that.
Uh, yeah, it's certainly changing the way that we understand risk, and ultimately, um, can't wait to dive into the details with both of you because it's something that I myself have never really dabbled in. I've never had a reason to. I mean, I get an email from my insurance company once a year that says, "Hey, you could, download this telematics app, and then we'll track you." And I am probably, self disclaimer, one of the insureds that will be last to adopt it. So it's a really interesting sort of, it's there now. What do we do to encourage it from a carrier standpoint? And I don't know. I don't know anyone who's really cracked that nut.
Yeah, I think,
So
and we'll get into this too. I think, I don't know that I've seen this fully activated, I guess I'll describe it as, but the idea of value added, like, hey, your telematics service can also essentially be your own OnStar and you don't have to pay for it, right? Like that's the type of experience and functionality, right, that I think could be potentially compelling. Because in the past, like there's been the what I describe as data for discounts, right? Which I participated in, which is like, hey, you get 5% off your thing if you put this dongle in and we suck up all your data. And I'm the type of person that's like, okay, yes, some of the tech and privacy, like, I'm actually reading one of the books on Edward Snowden now, whatever, it's like quite
mm,
fascinating. Like, of a theoretical basis, it concerns me, but yet I feel like I have nothing to hide, right? And so it's like I'm happy to trade data for money, essentially, right?
hmm
Um, and then there's the the next one, which is like, okay, we'll help your teen driver, right? Or, we'll give you a driving score and improve your driving habits and things like that. But there really hasn't been anything compelling, right? Like even that 5% I'm saving off of whatever I pay in premium is trivial, right? I'm sure I don't notice that I probably burn that more at Starbucks every week. So, but yeah, I think like, there's a lot more you can do with it.
Yeah, absolutely. I think that so one of the interesting things is I've always been passionate about the space world. I have background in space and new space, and I've been having a lot of conversations recently about how do we actually understand the risk in space, and oftentimes what it seems like we come down to is something quasi telematics. It's just, and I don't think,
Interesting.
yeah, and I don't think that wasn't obviously that wasn't the direction I thought we were going to go in, but it's kind of what we start talking about is the use of data and I don't think we're talking 5% discount, right? But
Right.
for instance, there was a significant launch that happened a month ago. They lost it all. It was a couple tens of millions lost it all. Why? It was because someone wired something wrong. They put the
Geez.
pin 1 in the pin 2 hole, and the pin the thing blew up. And maybe there's actually a role that telematics can play in that. I don't know. I think it's that's interesting. The other thing is now there's companies out there that actually let you monetize your own data. So right now you're selling your data essentially for a 5% discount, but there's a model emerging where you can say my data is worth $100 a month if you want all of it. And so now it's actually a commodity that you own and can proactively sell. And I think that that's definitely something that might affect the topic we're talking about today in the future.
Sure.
But we're not there yet.
Yeah. No, there's a lot of ways it could go for sure.
Yeah. All righty. So just everyone is going to probably start trickling in right about now. And for those of you just joining, thank you so much for participating in our webinar on telematics adoption today. We will get started momentarily. Hello, Carey. I will let you unmute yourself. Hello.
Hello. Hi, everybody.
Hey,
It is
Carey, good to see you.
Great to see y'all too. Thanks for having me today.
Well, and I just found out in the moments before you joined that you and Rob know each other quite well.
Yes, we have known each other for some time, shared some tequila, hung out together, shared some insurance knowledge. We've had a long time to get to know each other. Nice to see you again, Rob.
Great to see you again.
Just look at the light here.
That is fantastic.
There was a time pre-COVID that Carey Ann and I were at the same conference circuit. It seemed like every week we'd see each other in a different city at the same conference.
We're like you again.
That was a pandemic ago, but
well, I miss it.
Is this where you say you had all your hair before 2020 and then,
yeah.
Now we're post that?
Yeah, absolutely. Well, the good news is it seems like we're starting to get back to some in-person events. So it's wonderful to see people again.
I also got to get down the road to San Antonio, man, so we can visit. I'm right up the road now.
I know we've got the I-35 exchange here. Absolutely.
Stop at Buc-ee's along the way.
That's right. In between.
So apparently something that only people in California do, I just found this out, is they put the in front of the freeway name. Yeah, so it'd be like the I-5.
Yeah, that's right.
The 5, not, so it's always, not to geolocate myself too much, but it's always jarring when I hear people not put a the in front of the freeway name. And it's something I'm very passionate about, having grown up in Southern California. Is it's always proper now. But why don't we go ahead and get started? So obviously, thank you so much to our two panelists for being here. My name is Colby Tunick, and today we're going to be talking about how to encourage the adoption or the use of telematics technology in insurance. Just some quick housekeeping before we begin. We are going to be recording this webinar and will be making it available on demand after. Please keep your cameras and mics off for the duration. And then if you have any questions, please use that chat feature, and I will do my best to get all of your questions answered before the end by our two wonderful panelists. So joined today by Carey and the co-CEO of Loop Insurance. Hello. And Rob Galbraith, author of The End of Insurance as We Know It. Carey Ann is a thought leader in geospatial risk modeling and machine learning. She's a published research associate at MIT's Lab for Spatial Analysis, where her original work has been recognized by the US Department of Transportation. Her background is in city planning. Before she received her master's in city planning from MIT, she worked as an analyst at the Brookings Institute and the Urban Institute, where her work focused on mobility and urban economics. And I sense a nice tie in there with insurance coming. And she's been published multiple times in many leading publications, too many to state. She is the co-founder and co-CEO of Loop, an insurance technology company that leverages AI and data to create more fairly priced auto insurance products for all. Thank you so much for being here.
Thank you for having me.
And Rob, he is the most well-known, or I would say in my world, he's the most well-known insurance futurist, industry influencer, and international best-selling author. He is, quote, the patron saint of InsurTech and the most interesting man in insurance, both of which I believe. He's an award-winning keynote speaker and frequent media contributor. He speaks at events around the globe, and he holds the CPCU, CLU, and CHFC professional designations and co-hosts the wonderful InsurTech Geek podcast, which is available on all major platforms. Thank you so much for being here.
Great to be with all of you guys here today. Looking forward to it.
Awesome. So I think just a natural place to start is talking about what is the promise that telematics hold? Why is it interesting? What does it let us do better, smarter, faster, maybe even more fairly?
Sure, I can jump in. So, Carey Ann, as introduced, thank you for that generous introduction. I'm the co-founder and co-CEO of Loop, and we're a telematics-only car insurance company. So our customers agree to give their information via a mobile application, whereby we look at where they drive and how they behave on those roads. And I think to your question about what is the great promise of telematics, I would expand that to include more modern data sources more broadly, that as a leader in AI, as an executive leading a company that uses AI, that there are not a lot of great examples of folks using AI responsibly, ethically, and to solve some of, frankly, the greatest issues of that society is facing right now, in particular around equity in financial services and equity of opportunity, so that we can all, achieve that American dream of pulling ourselves up by the bootstraps and have a same, chance at making it in society today. And so with data, I find that to be a great liberator, a great equalizer, a great source of truth where we can have actual conversations about the way things have been done before, the impact of things like redlining and using zip codes in insurance and continuing to use credit, continuing to use occupation, and what that can mean if we focus only on a narrow set of data because it was available 50 years ago. Now we have this tremendous opportunity to address, frankly, the greatest crisis of this generation, which is that we are encumbered with financial stress. We haven't really gotten the feet underneath us. As a mid 2000s graduate myself, we came out of college in the housing and financial crisis. We are now in our 30s looking to start families and start homes, and we have a bunch of student loan debt that still hangs over our heads. We're one of the first generations that are less financially well off than our parents. And so it's about time that we focus and use data to really become not just more modern, but more appropriate for the reality of a broad swath of consumers who the old sort of incumbent system doesn't work for anymore. So very broadly, I think it's a great time and a great opportunity. And it feels like the most important thing we can be doing is using data to enforce and to perpetuate a society that we can envision where things are a bit more fair for more people.
I think from my perspective, Colby, just building on what Carey Ann said, and I'll start with a story. It's actually the first chapter of my book, The End of Insurance as We Know It. And it's something that in the 3 years that the book's been out, I know so many readers have told me that resonates with me. And that is the experience of taking my father, who's about 20 minutes away from me, just outside my hometown of San Antonio, Texas, to see his baby sister. So my dad's in his mid 80s. His sister is actually in mid 60s. And she lives in upstate New York, about an hour outside of Syracuse on the Galbraith family farm. It's been in our family for over 60 years. And so I had told him, Dad, okay, I'll give you one road trip. And I went to go pick him up. And he comes into the car and he's got an armful of maps from AAA. Well, as a kid, like I have so many fond memories of sitting in the back seat, following along in the Rand McNally Atlas. And some of my earliest drawings, weren't of superheroes or sports figures, but it was things like City of Buffalo. I was just fascinated by the maps and the major interstates and different stuff. And so I thought this is great. I can go with my dad. He can kind of follow along in the maps, but of course I'm going to rely on this technology that we all use today, GPS, to tell me, the fastest route. And, on our way up there, it was, fine, had a wonderful visit for a week. But over time, I kind of, any of us that have spent significant time with our parents after being grown adults and being away, like you can start grading on each other. My dad is not a great hotel buddy, doesn't know how to use headphones with his laptop, things like that. So on the way back, it's like, I'm ready to get back, see my wife, see my kids, get back in the workplace. And on the way back, we actually ended up getting in quite a bit of arguments about the best route home. And, I'm originally from Michigan. My dad for a long time was a winter Texan. So he would spend half the year down here in the San Antonio area and then half of the year back up in Michigan, where, coming from upstate New York, a lot of the routes that we were driving, he was a lot more familiar with than I was. And he can certainly use his past experience. He can look at things as this, an interstate. Is this a divided highway? Is this going to go through major metropolitan areas or countryside? Where do they have a lot of truck traffic, semis? Where do things tend to back up? And so he has a lot of kind of knowledge, both from that he could get from his maps, right, and from his experience in driving, that you'd say typically in the past he would have been in a better position to dictate, the fastest and most efficient route to get back to San Antonio. Yet because I have this, and I've got GPS, and I've got Apple Maps and Google Maps.
That one looks pretty old though, Rob.
I know, this is an iPhone 8, right? So yeah, it's not even the most modern technology, but it's like I'm using, right, streaming sensor data that's real time, right? What is the situation actively now? Has there been an accident, right? Has construction, not just, where there might be, et cetera. All that information is being streamed via cellular networks and stored in cloud computing. It's being processed by artificial intelligence at a highly localized level. It's beamed back to me. That's giving me, out of the millions of possible routes that I could take back to San Antonio, it's giving me typically 2 to 3 options that are most efficient, giving me, a much better experience, and it's communicating with me digitally. And so sensors, cloud, AI, localized knowledge, experiences, and digital distribution communication, that's scale. That's the acronym I talk about with emerging technologies that opens up so many possibilities for insurance companies today. And so why would I hate to say this, but why would I listen to my father when actually this is like much more superior, right, in terms of the best way to get home? Well, if it's true that following GPS and following, right, technology rather than listening to kind of the experience and some proxy variables that my dad has, why would I do the same in auto insurance? Why would I rate somebody based on their age, gender, and marital status when I can actually directly observe their driving behavior through telematics? Why would I have a need for a credit score? Some of these other proxy variables that, yes, have a correlation with risk at a group level that allows me to classify. But, we all know 18-year-old single males as a class, as a group, are worse drivers than 35-year-old married females. Yet I can think individually of, my son and how he drives, and my wife and how she drives, and say, actually, he's pretty darn cautious on the road, and she's a fairly aggressive driver, right? Well, with telematics, I don't need any of those proxy variables, right? I have the driving behavior. And if I combine the telematics data with information about the roadways and the vehicle, I now have a complete picture, right? What is the car doing? What do the roadways look like? Where do accidents tend to happen? Maybe there's a sudden, lane merging, or a tree that's obstructing a light or a sign or whatnot, right? I can get a much more complete picture of risk today that doesn't rely on, quite frankly, some of those outdated and biased variables that we've used in the past. I think as an industry, we're starting to see folks like Carey and what she and John Henry are doing at Loop, as well as other startups and even incumbents now, are starting to wake up to the fact that even though telematics has really been around for 2 decades, in the past, it's really all been about the insurance company. They've had different models, one called data for discounts, right? Which is you get a 5% discount if you put this dongle in your car and we're able to get your data. We've had things like, hey, we will help you with your teen driver, right? And follow them and give you some reporting on their driving. We will give you your driving score, maybe improve you as a driver. And so these have all been mechanisms to maybe influence from an underwriting standpoint or whatnot, and kind of nudge the consumer. But quite frankly, they just haven't been a compelling value proposition to the insured. And there's so much more that could be done that I know we'll be exploring on this webinar. So I just think, even though telematics has been around for a long time, we haven't made the full paradigm shift from that old world to the new world. We've been trying to fuse this new technology and new data, but just as kind of an incremental to the old way of doing business. And so it's really taking forerunners such as Carey to completely rethink the auto insurance space and how we can leverage this technology to benefit insureds.
So, I think there's so many great points that you both hit on, and something that resonated that I heard from both of you is talking about perhaps this new age of equality, equity, fairness, even to some extent liberation, because we know that some of those more traditional rating factors have biases built in, and that can make insurance products perhaps more expensive for groups or subgroups of people. When we think of adoption, I personally, just speaking as an individual who has insurance, I don't think I've really heard that message come out loud and clear from a lot of established insurance companies. And so one of the interesting things is, obviously with Carey and Loop, you're on the forefront of telematics, being a telematics only, telematics first insurance company. Is that almost a necessity in order to encourage the adoption of telematics? Or, is there something that perhaps these more legacy carriers who are maybe now just introducing a telematics program, is there something that, that can be done there to help them grow that? Or is that just, you gotta, if you weren't first to the telematics game, you're last?
Yeah, it's a good question. I think if I may broaden it just a little bit, in general, the incumbent insurance pricing model is structured for a specific type of consumer. It is targeted toward assets, trying to increase the value of that customer and target customers where they believe it's a good long-term value of that customer to acquire, because it is very expensive to acquire a customer in auto insurance. That strategically makes a lot of sense. So when we put telematics on top of that, there's this question of, well, why hasn't this group of white picket fence, middle America, 2 adults, 2 children, a dog, type household have an interest in telematics. Well, they don't represent all of the consumer market. And that segment is potentially not the segment that is going to be your earliest adopters, your greatest champions, folks that are going to tell people about the value that this new type of product brings to them. When we launch at Loop, we look for a customer who's about 25 to 40 years old, who grew up really with a cell phone in their pocket, who's comfortable with mobile applications, who's familiar with the concept of data exchange, where I use Google Maps, and in exchange, Google Maps has information about where I drive. Or I use a dating app or an Instagram where I want to tag my photos. We understand that in this modern era of cell phone usage, that this is sort of the compromise that we're making in using these types of mobile applications. And so can we patchwork, take a product that was built for a different type of consumer and convince that type of consumer that this is useful for them? Well, maybe, but I'm not surprised that the results haven't been as fast or as robust as we'd expect them to be. Now, for a Geico, for a Progressive, for an Allstate, for an incumbent carrier, that continues to be the demographic that they seek to go after, it feels to me like a bad investment, frankly, to put a lot of money into telematics, because your customers aren't going to adopt that product. It's very expensive. It is, you need a mobile application essentially built out. You need a customer service team who understands how to engage drivers on a frankly niche product that not a lot of, the majority of your customer base, frankly, isn't going to use. And it costs money, especially if there's hardware involved. And so I think a lot of the incumbent carriers look at telematics as frankly a loss generator or a problem generator for their specific customer segment. And that's fine. But if you're a carrier that really wants to go after the 25 to 40-year-old segment, what we need to do is actually really focus on telematics. And I think you mentioned bias and fairness, and there's definitely in the 25 to 40-year-old category a huge focus on being a consumer that buys from companies that we align with as a brand. I know people who won't go to Chick-fil-A, or I know people who boycott Hobby Lobby. We buy with our values forward. But beyond that, I think the incumbent method that works for the more traditional, the Robinsons of sorts, if I can generalize, they also, the way that it's priced, it's also dynamic. So credit, for example, is a key thing that a lot of people point to. Credit score is super biased. Well, the way that credit works for a 25 to 40-year-old is very different than the way credit worked for a 40 to 65-year-old. And so you see dynamism in the way that people are deploying their credit. They're buying commercial real estate properties, leveraging their credit to build wealth and build equity in a property. You're seeing folks with student loan debt, or in the crisis of COVID, putting more on their credit cards. You're seeing a lot more people continue to rent until later in life because they can't put the cash together to frankly afford a home in today's reality. And so if you have this dynamism in credit and you say, hey, this is how I understand the importance of credit. If you have low credit, you're a bad driver. And if you have great credit, you're a great driver. But credit changes in ways that are not related to that risk. And they're changing the most, particularly in the segment of 25 to 40-year-olds. So really our challenge here is to find the data and use the technology that helps us segment better and make better bets on people who are maybe lower credit, but who are no more risky drivers than anyone else. And in the process, what we also identify are people with high credit that are really bad drivers. And so it's not just a product for people that necessarily have great credit. It's a strategy to be able to better segment the market and utilize the information that we have available to us instead of overgeneralizing that a product built for the the 40 to 65-year-old segment also works for a product for a 25 to 40-year-old segment. I think Loop's in a great position to capture that market. And long term, I would much rather be selling to 25 and 40-year-olds than 45 to 60-year-olds, in part because they're very early in their insurance life cycle. And as you're seeing with Lemonade and other companies that are a little bit further along than us, there's an opportunity to add on additional products, whether that's homeowners insurance, renters insurance, life insurance, or other financial services products like lending products that can accompany that person on their journey.
Yeah, I would add, Colby, that first of all, telematics, I kind of mentioned about rethinking it entirely, right, previously of what's possible. So it's not just about replacing, say, annual mileage, right? That's something maybe I asked my insured before, and now I don't need to ask them because the telematics will tell me precisely how much they drive. It's like, yes, but that's just an incremental improvement. It's actually not rethinking just the entire experience that the insured has. So unfortunately, auto insurance works like most other insurance products. And insurance is a unique product, right? Different than many other consumer products, either things that we buy on Amazon or entertainment that we might be streaming on Netflix, et cetera, or even a ride share, right? That we take, if we take Uber, we don't like that experience, we switch over to Lyft. It's very similar. We go back to traditional taxis or we rent a car, whatever. With insurance, because it's a purchase that you make infrequently, and it's a legal contract and a financial instrument all rolled into one, people are confused. They don't necessarily know what they're buying. They're asking for money up front. I'm actually not seeing anything tangible that's coming from my carrier. Maybe if I'm lucky, I'll get my policy packet, right? Maybe I look at my declarations page, probably not. And it's kind of like, hey, buy us. We'll send you this paper that says you're covered. We'll sell you your insurance card every 6 months. But otherwise, hopefully you never hear from us again, right? Until you have a claim, here's the number to call. But it's like, I don't want to actually have to file a claim, right? So I actually don't want a relationship with my insurance company. It's as weird as that sounds to say, right? It's like I'm buying the super expensive product from a company that I don't care about very much. So the analogy, I think about technology and I think of a company like Apple. So I'm talking to you on my MacBook Air. I've got my AirPods in, et cetera. I don't think of Apple as a technology company, although it certainly is, right? It's like a Samsung, it's like a Lenovo, it's like a Microsoft, but yet it's a lifestyle company, right? And I'm willing to pay even more for that premium. I just put it kind of conceptually in a different category. And I think telematics opens up just a world of possibilities. It's like, what if you provide some type of OnStar similar service, right? Where you have a crash detection and you can actually call somebody's phone and say, hey, I just sensed that you may have been in an accident. Are you okay? Maybe you can tell me where the nearest repair shop is. Maybe you can even help me maintain my vehicle maintenance. There's so much more possibilities than just replacing, variable A or finding a better or more accurate version of variable A or adding variable B. And one of the things that Carey Ann and the folks at Lupin are doing is they're actually building a sense of community, right? So just as I'm a loyal Apple customer, if it comes to my iPhone, I get it from AT&T, but are they really any different than Verizon or T-Mobile? Probably not. It just so happened that the AT&T stores are closest to me. I've bought from them years ago, and I don't have a compelling reason to switch. That describes most insurance carriers today. And yet, customers of Loop, from what I've seen, and I think this is true for other companies that are attempting this, it's like they actually do have a relationship that goes beyond, right, getting that insurance card and the 800 number to call or the website to go on to file a claim. And so I think you just have to reimagine the whole auto insurance experience when you're thinking about how can we best leverage technology and how can we incorporate it as part of an overall value proposition for our customers.
That's a beautiful point, Rob. And thank you for always being a a big fan of ours and a supporter. I've read Rob's book as well, and a lot of this you outline. It's not unclear the problem, right? The customer pain point is very well known, very well documented. As an executive of a car insurance company, now the way I think about it is not just in little product features here and there, little capabilities, as you mentioned, ways that we can leverage data on the margins, but building a people focused brand. We look at companies like Chick-fil-A, we look at companies like In-N-Out Burger. They greet you immediately. They say, welcome. They invite you into their ecosystem. They make sure that you're cared for in that onboarding process. They'll give you extra delights. There's like secret sauces that you can access, right? They're making sure that as part of your time with them, they make it feel like they are of service to you. They put flowers on the table, there's salt and pepper. Someone will come and wipe the table down. We've strayed very far away from that in insurance, but that's a huge opportunity for a company like Loop to step in and say, hey, we're going to treat people fairly and honestly in the way that we price, but it goes much further beyond that. It goes towards connecting with insurance's inner core, which is about community, about taking care of each other, about being of service. And I think that that's always been there, but Loop is one of the first brands to really bring that to the forefront. There are other insurtechs out there. I mentioned a few. They tend to be a little bit more product focused, right? They have really cool apps. They have really cool chat bots, but they haven't yet broken that wall of just talking to people, of being on the street, handing out ice creams to people and saying, we just want you to feel cared for, loved, appreciated. We put people first, frankly, when we make decisions. So just to add to Rob's point there, I think it goes even beyond the product features and capabilities that we can design to thinking about it as a brand, as part of our mission, as part of what we do, why we do, and how we make every decision that we make.
It sounds like what you're really advocating for is to just treat people like people.
Mm-hmm.
And maybe that's not such a novel topic, but perhaps within the insurance world it is, because everyone's been boiled down to bits of data that are used to understand their risk profile. And I think perhaps doing that sometimes can strip away the fact that you're dealing with real people with real problems with their own lives and their own concerns. And I think that's I think that's immensely important, that we remember that we have to treat people like people. And if you're trying to sell telematics as another way to understand someone's risk profile to continue to further boil them down, it sounds like you're just not going to be very successful with that approach.
So I would argue differently. Telematics has been frankly implemented by and designed by, and the experience has been designed by insurance product people who think from the regulator mindset, who think from the how can I get this approved and documented. And it's sort of like outsourcing. If anybody's ever outsourced a mobile app or outsourced the development of their website, right? There's a very big difference between the consumer facing side of things. I'm like, my mom is ringing in my head. It's not what you say, it's how you say it. And there hasn't been a lot of consumer focused brand building, people focused brand building in insurance. We see it in commercials, right? That they're self-aggrandizing, they're comedic, they're like making fun of themselves, they're talking about extreme circumstances, when in reality, most people are just trying to make a living, go to school, get to work, drop their kids off, whatever it may be, and really coming back to using telematics to inform the lifestyle and decisions of the everyday person. I don't see Geico in that space, but Loop certainly is. So we try to be a little bit more the reality of your living, and how can we guide that with more data and more information. So a lot of our customers have Apple Watches, and they look at their Apple Watch to see how many steps they may have taken, whether they're meeting their health goals. Well, we find that new dads in particular pay a lot of attention to their telematics scores. Their kids are talking about it in the back seat. Dad, your score went up to 4.8 versus 4.9. Their wives are grateful because they're slowing down on the road, and they have a way to say, okay, yeah, now you are actually driving a little bit more safer. And so there are segments of our population that are living just everyday normal lives that really benefit from and engage with the data that are coming out of telematics. But certainly if you yell at someone and tell them, you should really stop braking, or you should really not speed. Yeah. I mean, the reception for that, nobody wants to receive that. That's more a consequence of who designed the experience than the product itself and the telematics being somehow fundamentally flawed. We need to figure out a way to just connect with people in ways that they appreciate and ways that they value. Another really good example is we're building in a discount that if you keep it 90 days under 90 miles per hour, you'd be surprised how many people actually not only go under 90 miles per hour, but reduce their average speed by anywhere between 5 and 10 miles per hour, where we can incentivize and gamify the behavior that we want to see in the drivers that we want to perform better, just simply by making it more engaging for them and connecting rewards and other sorts of fun data experiences to the information that they're getting back.
So, and I think Rob, I think he synthesized that really well when he was saying that, most people are not looking to create a relationship with what they see as that big established insurance company, right? It's something you buy, it's kind of a painful process, and they don't want to get any closer. So what is it about, what makes the companies that are able to get close, or maybe not what makes them successful, what are the behaviors of a company that will eventually be or is successful in getting close to their customers? What does that look like? How do you get close to someone with an insurance product? How do you welcome them into your community?
Yeah, you give value up front. You start by being of service to them before you ask for anything. So Loop has, for example, a waitlist and newsletter that is quite robust, about an 80% click-through rate in our newsletter, because we're helping people with financial tips about how to either understand their own financial health and wellness, or how to understand their insurance products, what they buy, how they buy it. But we're also in Discord and Instagram. We have an entire team dedicated to building community specifically, that is responding to every note that we get, every question that we get. It's building customer service in-house. It's not farming that out. It's, again, what you say and how you say it. Treating people with dignity and respect when they call, making sure to follow up. It's the basics. But I think it starts well before you ever ask anybody to buy your car insurance, that you need to essentially, just like establishing a relationship with anyone, you don't ask someone to marry you on the first date. You build that trust and that relationship and really consider yourself a part of their community in every action that you take. So, for example, we had a lot of fun at South by this year. We rented an ice cream truck and drove to 6th Street in Austin, Texas, and handed out 500 ice creams. So people were coming up to us saying like, "Oh, you're an ice cream brand." No, we sell car insurance. We just want to have a conversation with you and make you feel great about this ice cream. Who doesn't like ice cream? A free ice cream cone. We didn't ask anything of the people who came to the truck, who took an ice cream, but I can tell you, they posted it on Twitter, they posted it on social media, they were grateful. We developed a brand interaction that people will remember. All of these things happen before anybody opens up their wallet and pulls out their credit card. And I think if you don't invest into that advanced community building, when you do make the request, or when people do get to a point where they want to buy, and that isn't established, they only kind of like you a little bit. They're probably more than anything, buying based on the price relativity, whether you can give them a much cheaper rate. What we like to build is people are buying Loop because they love Loop. They love the product. They love the people who are building it. They love the experience. And you can't do that by just maybe giving them discounts at the point of sale and these delights that go away. You actually have to be working towards a marriage, and a real sort of deep relationship with people starts well before you ever sell them.
So when we think about this term, obviously car insurance and auto insurance is not the only sort of telematics that exist. There's a poll now in the chat around what are some of the other sort of telematics that people on this webinar are exploring. And so, Rob, in your book, The End of Insurance as We Know It, that came out, a couple of years ago. How has your view on telematics technology changed? And maybe you can also kind of walk us through what you're seeing in the ecosystem for companies that have successfully rolled it out versus maybe not so successfully rolled it out.
Yeah, great question, Colby. So, it can be a win-win proposition. So let's be very clear, right? Of course, we want it to be a win for the customer, and that's a big theme of what we're talking about today. By no means is it not a win for the carrier, right? Or the agent broker, if that's the distribution channel that you have. So I want to make that very clear. Like, this can be a win-win proposition. The way I think about it is insurance companies basically compete across two dimensions when it's all said and done, and that's algorithms and experiences. So it's not like, a car manufacturer where you've got more cup holders than the next person, whatever. Yes, there is some product differentiation, but for the most part, right, the product is somewhat invisible, right, to the customer. There's such an intangible quality about it. Yes, it can become tangible when you file a claim and have to go through that type of experience, but it's very difficult, I think, to compete just on product features. And so the sales price or the discounts for the data, right, those tend to maybe be a focus. So the algorithm piece for telematics has been compelling for 2 decades, right? From an actuarial standpoint, improving my pricing models, right? The more accurate data, the more granular data I have, the better I can price, the better I can underwrite somebody and manage whatever my underwriting appetite is, both on personal lines and commercial lines. The better fraud detection I can have from a claims analytics standpoint, right? And help, reduce losses in LAE. But I think that's been actually the reason that we're at this moment still in 2022, where we don't have widespread adoption across much of North America, where we're coming to folks from, as well as other parts of the world. And I know different countries have different levels of adoption. Certainly Italy's been pointed out as one that has a much higher rate of adoption, but they've had some of this experience component that Carey Ann was talking about, this incentivizing, giving you free coffee or other kind of rewards, the gamification part. I think about the State Farm ad with Aaron Rodgers, and he says, don't mess with my discount, right? And so we've added some of these elements to it. Allstate with DriveWise. I know USA's had like safe driver competitions in San Antonio, Los Angeles, and other cities. So people are now starting to focus a bit more on not just the algorithm part of it and, hey, how can we use this data to improve our algorithms? Yes, that's, again, compelling. I don't want to minimize that part, but how can we also provide better user experiences? And unfortunately, that's been the challenge of insurance: is what is a user experience? Is it a funny commercial that's on TV? Certainly, if you have a claim and have a good claims experience, and I can attest to many folks that I talked to in my days at USA, that if they had a positive claims experience, they will tell you, I'm a USA customer for life. I don't care how much it costs, whatever. I'm never switching insurance companies. But we know that only 5 to 10% of people have an actual claim in any given policy year. And so what are you doing for the other 90 to 95% of your customers, right? What value are you giving them? And so telematics, however you decide in your firm, right? And I think trying to segment out, are we talking about fleet managers? Are we talking about fleet drivers? Are we talking about personal lines auto? And there's quite a bit, quite frankly, that are hybrid risks today. It could be ride sharing, it could be delivery, right? We've got Uber Eats and DoorDash and all that, people delivering packages. Amazon, it's not just the UPS truck or the Amazon truck that comes to my door. It's people popping out of their two-door sedan and folding down the back seat that are delivering packages. We have people that are maybe they work at a nursing home or taking care of people. They're using their personal auto, but they're transporting people to doctors' appointments or the hairdresser or whatnot. Is that a personal lines activity? Is that a commercial lines activity? Do they have a commercial auto policy or not? Like, we have so many now kind of that are in this blurred stage. And so I think just really breaking down your customer segment, your customer base, what are the needs, understanding that different customer types are going to have different needs, and then figure out a way, what is the capability of telematics and how can we design experiences that are optimized for this particular customer base that I'm targeting. And yes, I'll still get my data, I'll still get my improved algorithm piece, but it's got to be a balance of the two.
I think something that resonated from that was that you have to provide value back. I know, Carey, that was something that you mentioned too. It's about providing value first so that people become not only a consumer of what you have to offer, but someone who loves it, an evangelist. And I think that that's something that in insurance we often miss, is that, it's thought of, it's just a commodity, right? And there aren't very many companies that are focused about building a relationship that would be akin to love, where people love their iPhone or people love ice cream or their veterinarian. But that's just such an interesting concept for me, because I would never say I love my auto insurer. And this was something that you talked about with price sensitivity. They're my auto insurer because they are the lowest price. However, my partner, there was a situation where I had to call to get something done on my account, and she had a call to get something done on her account, different accounts. It took her with one carrier 30 seconds to get a hold of someone, and on mine it took 45 minutes, right? And so I think that there's something there to be said about, if you're only competing on price sensitivity alone, maybe it's just a race to a bottom, but you're certainly never really going to get that stickiness that you're looking for. The other thing that I'm kind of hearing, and I just want to call out, is that if you're an established company and you've introduced a telematics program, you can't try and introduce that value that it's providing to your consumers in the same way you would every other product. And you almost have to rethink that entire experience around introducing that. And something that is lacking is that sort of fresh perspective, fresh thought on how you introduce this product. And you can't market it like you would any sort of, you're not going to sell telematics like you will an umbrella policy. And I think people that have done that aren't being very successful right now, from what I've heard. One other thing is, I almost think telematics is akin to, say, seatbelts, where the insurance industry took a huge step forward in encouraging the adoption of seatbelts, 3-point seatbelts, 2-point to start, but 3-point seatbelts, and reducing the risk from crash, improving auto safety in general, even more so than the federal government. The federal government at the time was far more concerned with, what should the highway speed be. And if, nothing else, I think that that's a really, it's equitable of insurance to be leading that on the telematics front too, because like you were saying, Carey Ann, if you can get people to reduce their speed willingly 10 miles, it doesn't matter what the posted speed is. You're making the community you live in safer, but you're also making it just a better place to live in general. And I think that that's something that telematics and telematic first companies are really pioneering or leading the way for, is how can we make, specifically auto risk less? How can we make it safer? And how can we encourage this positive behavior from a private sector standpoint?
Yeah. So some thoughts on that. I think most people, when they're still buying auto insurance, tend to buy based on price. However, you mentioned these incumbent carriers introducing new products and having a difficulty in rolling them out. I think is in part because there hasn't been trust built already in that relationship, and there's a lot of concern about providing more data or more information to a company that you don't already trust to begin with. So trust is a really important part of rolling out a telematics product. You can't assume that a customer is going to be excited when you're asking them for more data. And the only way that they've used that in the past is to make your rates go up or take your discounts away. So I think what we've seen in terms of the implementation is not a harbinger of what is to come when you have a different strategy in terms of rolling it out in collaboration with people. When we talk about bringing value back to the customer over the lifetime of the policy, touching them more often than only when things go wrong or at renewal, a lot of insurance people will point to safety. Hey, it's going to make people go slower or not drive on such dangerous roads. And that's true. But also, most consumers don't make those decisions about how they're going to drive or that they're going to drive less or whatever behavioral change that we'd like to see. And they don't make that decision because safety is such a high priority on their list. I think what we're seeing is actually consumers that value fairness, that want to have a little bit more control over their price. And because the insurance industry has been so opaque, the ways in which they can do that are either not clear or not structured to benefit them. So it's really nice that, if I'm gaining wealth and able to afford to buy a home, that my insurance company would offer me a discount. But the reality is I'm pretty far away from being able to take advantage of that. And many Americans will never own their own home, never be able to take advantage of some of the benefits that are afforded to a very select few of people because they're financially better off or born into better circumstance, or through whatever means we're able to get a degree from Harvard or a white collar occupation. We can't then in the process overlook that experience for people who don't fit that profile. They're actually looking just for the value of, hey, my price is structured for me, and the discounts that I can earn and the benefits of keeping a really affordable rate over time reflect my reality that I'm not going to buy a home, that I'm not going to buy boat insurance or whatever other coverages that the incumbents are trying to upsell me on. So I think telematics has this benefit of safety, but that's not necessarily what the consumers, or at least consumers of Loop, are primarily making their decision based off of. They're really making that decision based off of, does this product as a financial service product fit my lifestyle, and will it grow with me as I continue to need it?
I appreciate that. Thank you for the clarification. I think it's an important one. An audience question: what are your views on OEMs getting into insurance with the emergence of connected cars?
Great question. Rob, do you want to take it on first?
Sure. Yeah. I think it's really interesting. There's definitely a lot of activity out there. Tesla's probably the best known of this. And when we talk about the OEM, the telematics data, right, which they have in all Teslas, and then the being the provider of insurance now directly, it's pretty powerful. There's actually been some questions out there, like on Insurance Journal as other. We brought this up on a recent episode of the InsurTech Geek podcast of who actually owns that data. Does Tesla, the OEM, own that data? What about the insurance arm of Tesla? Traditionally, it's been the customer that's been perceived in the US, at least in Europe, maybe different in Asia and Latin America, right? And they would have to consent to allow that data to be used, but it's actually unclear, particularly in the case of Tesla. So I do think it's quite fascinating. I will tell you, in a lot of the OEMs that I've talked to, part of their interest in the past, I don't think they were thrilled about the idea of kind of, taking on this uncertainty and risk that a lot of carriers do. But they've come around to recognize that the inability to acquire auto insurance is actually costing them quite a bit of sales, of car sales, of vehicle sales. So I've heard estimates from anywhere from 20 to 40% are not able to actually drive a vehicle off of a dealer's lot because of their inability to get insurance. And I've even heard companies such as Carvana and others that deliver the car to the customer are actually having to load that car back up and take it back because they were unable to show the ability to get insurance. And so that friction point from the OEM perspective is really fueling, I think, an interesting rise, and to be able to say, hey, we know a lot more about these risks than we did in the past. What you did with the car after you drove it off the lot or after we delivered it, we didn't really know. But now with telematics, we actually have the ability to know, we have the ability to aggregate this, particularly in the case of Tesla, among all Tesla drivers, right? All Tesla vehicles. We have a lot more knowledge as the OEM, so we feel a lot more comfortable taking on this risk. And if we offer a compelling product, and people are talking about selling insurance through the in-car entertainment systems and others. So I do think that the OEMs are quite an interesting actor in this space, specifically as it relates to telematics and insurance to watch going forward.
Yeah, I couldn't agree more, Rob, with that comment. We see a lot of folks who, when they consider the cost of insurance as part of the cost of vehicle ownership, significantly change their decisions about what they can afford to buy. And frankly, also what type of vehicle to buy, because companies like Loop also offer discounts for hybrid and electric vehicles to offset the additional cost of those vehicles and help, consumers make better choices for society, not just for their own wallet. And I think that's absolutely right, that auto manufacturers are seeing that affect their bottom line, that the cars that they want to sell, they can't get off the lot because the cost of insurance is so expensive, particularly if you have lower credit or you have a certain demographic profile. So the early movers in this, the Toyotas of the world, whose customer overlaps significantly there, where the incumbent insurance product just doesn't make a lot of sense to get people off of the lot with a car, are looking to some of the new insurtechs. Root has partnered with Carvana. Loop is pursuing relationships with these folks because it is a pretty significant both financial and business decision to launch a car insurance company on top of being a manufacturer. But I think what it is the harbinger of is, and we should all consider, is the existential threat to the incumbents who don't use telematics at all. Because I'm sitting down at the poker table and I can see everybody else's cards and you can only see your own. Eventually, our ability to segment the market, our ability to understand driver behaviors vastly exceeds any non-telematics based company. And you just have strategic profitability advantages of going that route. So whether it comes off of the vehicle or if it comes off of your phone through Loop, I think this is an existential threat to the incumbent companies. And I don't want to put projections on it, but I think that there is a future where Progressive doesn't exist or Geico doesn't exist. We think about these businesses just as too big to fail, but their feet are also nailed to the floor. They're giant whales that have difficulty turning, and the pace of technology and consumer change and appetite of other businesses to do it better than the way that it's always been done can really, if I was sitting in one of those insurance companies, I would start thinking about crisis planning over the next 50 years.
I think it was a great visualization, thinking about people sitting around a poker table and you having access to everyone else's cards while they're only looking at their own deck. And, with the time we have left, we've talked a little bit about how telematics adoption has been now isn't necessarily indicative of what it's going to look like over the next 50 years. So what do you both think that looks like, moving forward 10, 20, 30 years out from now?
Rob, do you want to start again?
Yeah, I would say, actually, to echo Carey Ann's point. So one dynamic here that's true of pretty much anything in this big data AI type model, right, is that there's very much a winner take all type aspect to this that there really wasn't before. So if you think about how fragmented auto insurance market was, and I don't have the numbers in front of me, but it's something like the top 10 carriers maybe have, 2/3 of the market or something like that. Nobody necessarily has more than 20%. I think State Farm is the most, right? Allstate, Geico are up there. I know USA, we were around like 5% or so when I'm there. I don't know where things currently stand. One of the reasons people are worried about China, for instance, right, in terms of this AI race with the United States and others, is it's like, well, guess what? They have 4 times as many people. That means they're collecting 4 times as much data as we have. And oh, by the way, right, there's different standards in terms of like privacy standards and others, but that aside, right, just volume of data. Hey, the more data you have, the better fine-tuned your algorithms can be, your artificial intelligence, and it learns. And at a certain point, once you have the data, once you have the insights, and once you're able to kind of tune that and refine that to later decide, hey, we should start collecting our own data, we should start making some algorithms, it's too late, right? You'll never be able to compete. That's why you get an Amazon, right, as being such a kind of a giant entity, and it's very difficult, or Google or anything else. So I do think that's an aspect that is brand new to this marketplace that we haven't had in the past, right, from an insurance standpoint. The other thing I'll add is, most places, this is actually a very stagnant marketplaces. The number of licensed drivers in the United States, at least, has actually dropped since 2013. I know, for instance, my daughter's 20 years old, no interest in driving. Like, she'll kind of do rideshare or public transport or whatever. And so, cars are getting safer all the time. Now, there's been this kind of interesting problem of there's been more severity recently. We have, pedestrian fatalities are way up. Distracted driving is a major problem still. But over time, as a stagnant marketplace, the products in force may be growing, 1 to 2% a year. The number of licensed drivers is dropping. If cars get more safer, all of a sudden losses drop, premiums are going to necessarily have to drop. Well, guess what? Those premiums are subsidizing a lot of expenses that tend to be very fixed expenses, computer systems, personnel, things like that, that aren't as variable with, auto and premium. Loss adjustment expenses may be the only one that's really kind of correlated directly with premium as a variable expense. And so I do think a lot of current business models in the long run are going to be unsustainable if this type of pivot isn't encountered. So whether it's figuring out your telematics strategy and the best way to leverage that, or just product diversification of, hey, we're going to let auto be our cash cow, and we're going to investigate, maybe it's motorcycle insurance, right? Maybe it's RVs, or hey, no, we're not going to have an autonomous motorcycle 20 years. The whole point of a motorcycle is to drive it, right? So maybe there's some product strategy that you choose to employ, but if your plan is to stay on the auto insurance long-term, you must have a telematics strategy.
Couldn't agree more, Rob. And I think we can look to other industries because insurance has lagged in terms of adopting new technologies and developing product in the modern era. We can look to other industries like banking and financial services that have undergone this transformation over the last 20 years, and new, very big digital banks are who I bank with now. I don't go into the branch anymore. I don't write checks anymore, right? I don't even transact in cash anymore. Things change. And one of the big, I think, things that makes this inevitable is not only the data that you collect, which allows you to make much more dynamic decisions and be more responsive to changes on the ground. As Rob mentioned, severity increasing during COVID-19. We saw insurance carriers just blanket give back 15%, which ultimately wasn't even enough in comparison to what they probably should have given back, but they're flying blind. And whether that was in the best interest of the consumer to at least give something back, I think that the data that we're getting allow us that strategic advantage over time. But also not just the data, we have to take a step even further back to say that companies like Loop are building their own tech stack that allow us to own and build systems and control and change course as needed. The tech stack that these legacy carriers are built on is the problem. The third parties that have been built to accommodate all of the different circumstances that were built with a waterfall methodology technology are just cemented into a process that's just not easy to change. So when you start by saying, hey, we need to facilitate a product that's very data forward and dynamic, you then have to say, okay, what sort of technology am I going to build on? And what kind of durable, sustainable, scalable technology should I establish this foundation of data on? That gives the real strategic advantage. That's why digital banks are winning. That's why mobile-based experiences are winning, is because even if we get something wrong, and we will get plenty of things wrong, we can pivot a hell of a lot faster because of the tech and the strategy that we're built upon.
Well, we are now at the end of our time, and I cannot thank you both enough for spending the last hour with us, sharing your expertise and experience on telematics and the adoption of this. I'm not going to call it a new technology, but definitely increasing in importance technology. It's definitely going to change the way that insurance operates. And for all of the reasons you just said, thank you so much again for being here. We'll have this video posted early next week. And for those of you that are on this call, for any questions we didn't answer, feel free, to send them to me at this email, and I will do my best to answer them individually. And again, thank you so much for being here. It was great to have you, Carey and Rob.
Thanks, Colby. And folks can reach out to us direct. I know both Rob and I are very accessible on social media at Ride with Loop or on LinkedIn. You can reach out to us to speak with us personally too.
Awesome. Well, thank you for making yourselves available, and everyone have a great rest of your afternoon.